Hello, I'm Daiso, and in today's video we are going to answer the question, should I invest in Bitcoin or real estate? My videos are not meant to be fun or entertaining, but to actually teach you something worth investing your time in. So if you're serious about building wealth, this video is for you. Real estate is the go-to investment for people who want stability, and Bitcoin is the go-to asset for people who want asymmetric upside. Both claim to be great hedges, both are considered hard assets, and both have made millionaires, but they could not be more different. Real estate made fortunes over decades, while Bitcoin made fortunes in months. But here's the truth, the wrong asset at the wrong time can cost you 10 years of progress. If you don't understand how they actually work, you'll end up either underexposed to growth or overexposed to risk. Today we fix that. By the end of this video, you will understand the key difference in returns, risk, taxes, inflation protection, and liquidity, why Bitcoin and real estate are fundamentally different assets, and which one is best for your personal financial goals. And most importantly, you will have a mental model to decide which one makes the most sense right now. If you're still here, I am highly confident you're a smart individual. So let's start with category number 1, growth and potential returns. We start with the money. 1. Long-term returns. Bitcoin has outperformed every asset over the last decade. From 2011 to 2021, its compound annual growth rate was over 200%, but it also suffered 80% drawdowns multiple times. Real estate, in contrast, delivers 3 to 5% appreciation per year depending on the market, but when combined with leverage and rental yield, it can outperform the S&P 500 if managed well. 2. Upside and downside. Here we discuss the two types of strategies investors want to adopt. Bitcoin offers high potential returns but is quite uncertain due to its volatility. This is a good bet if you want to double your investment in a couple of years, but it might just do the opposite if you are not well positioned. On the other hand, real estate is a slow builder, just like a safety net. You give up on high potential appreciation to go on a more certain and linear path. You most likely won't double your investment in a year with appreciation, but you certainly will have more money than you put in. 3. Income generation. Here we get into one of the key points of real estate. While real estate has a slow upside potential compared to Bitcoin, it has the ability to generate cash flow monthly if you rent it. And this is a major difference compared to Bitcoin, which is a non-yielding asset by design. The only way you can get cash flow on your Bitcoin is to take on additional risk through lending or staking. I personally wouldn't recommend it. This is a risky play as you may lose your Bitcoin and the income is marginal compared to the upside potential. So real estate has an advantage when it comes to cash flow, but that cash flow isn't free. It comes with tenants, maintenance, and property taxes. So if you don't want to deal with all this management, Bitcoin might be a better investment. Great, now let's introduce category number 2, risk, liquidity, and control. 1. Liquidity. Having an asset that gains value is great, but to realize your profit, you have to sell it. Here again, there is a major difference between the two options. Bitcoin trades 24/7, is highly liquid, and is global. This means you can sell it whenever you want, wherever you want. You just need your wallet and an internet connection, and in 10 seconds, you can sell your Bitcoin and get the cash for it. It is another story for real estate. You have to find someone who wants to buy your property, and because it is not a standardized asset, people have to like your property more than anyone else's to buy it from you. In addition to that, you have all sorts of legal procedures to go through, plus some transaction costs that adds friction to the transaction. The result is you might take weeks or months to sell your property. You won't get your money as fast as you would with Bitcoin. So if you think speed and flexibility matters, Bitcoin wins. 2. Risk profile. Now, when it comes to risk, they both have their pros and cons. Bitcoin might suffer extreme price swings, and even if volatility is in a risk factor, it might be if you want to get a quick return. We can also note that regulation around Bitcoin is still unstable as it is an emerging asset. You also have to factor in the fact that any custody errors may cost you your holdings. If you send coins to the wrong address or forget your recovery phrases, they are gone forever. But real estate also has risks. The housing markets move slower than Bitcoin cycles, so if your investment suffers a market crash, it will take significantly longer to recover. You must be positioned for the long term and be prepared to wait years. You also take the risk of having bad tenants when renting your property. If your tenants are a headache or do not take care of your property, it might cost you a big chunk of money. Next, we have leverage blowups. And even if this risk factor isn't intrinsic to real estate, loans are very common in real estate, so it is highly relevant. If you take on a mortgage with a high loan to value to buy properties and the market suffers a significant crash, you might lose your property as the bank will sell it to get their money back. 3. Ownership and control. One of the core principles that makes people bet on Bitcoin as the future of money is the possibility to become your own bank. You can self-custody your Bitcoin and get rid of any middleman. Thanks to that, you do not have to tell or ask permission to your bank to send or receive money. You are effectively free to transact however you want. Your Bitcoin is stored in a wallet and no one can seize it. Plus, you have no fee to hold your Bitcoin. You only pay to send it. With real estate, you are the landlord, but also the manager, the repairman, and the compliance officer, unless you delegate those tasks, which of course costs money. You also have recurring costs with property taxes. So to summarize this, Bitcoin has a simple ownership with complex volatility. Real estate, on the other hand, has complex ownership with stable returns. It is now time to get on the last category. category: taxes, inflation, and suitability. 1. Tax optimization. Now we are touching a sensible subject. How much money do you keep from your investment? Bitcoin is taxed as a property in the US, meaning you pay capital gains when you sell it. You have no depreciation and no interest deduction. But in some countries like El Salvador, where Bitcoin previously was a legal tender, you have no taxes on this asset. When it comes to real estate, it is a tax optimization machine. You get depreciation write-offs, mortgage interest deduction, and for the US you get 1031 exchanges. What's more, you can cash out, refinance, and pay no taxes while accessing capital. So if your tax bracket is high, real estate can be significantly more efficient. 2. Inflation protection. This is an important part to take into consideration, especially with the rising inflation. One of the core characteristics of Bitcoin is that it is said to have a fixed maximum supply of 21 million coins. This means dollar inflation only makes the price of Bitcoin rise through scarcity. Bitcoin is by design made to gain value as inflation speeds up. This is good in theory, but Bitcoin is still in its adoption phase, and because of that, the major part of the upward movement we've had so far weren't due to inflation but exploding adoption. So Bitcoin still has a long way to prove it is a good hedge against inflation. Real estate, on the other hand, has proven to be an hedge against inflation for decades. As inflation rises, so does the value of property and the price of rents. But you have to be careful. Replacement costs also rise with inflation, so it gives an advantage to Bitcoin which doesn't have any replacement cost. So to make it clear, both assets can act as inflation hedges, but real estate has the track record. 3. Psychological fit. Bitcoin attracts technologists, risk takers, and macro theorists. Real estate attracts operators, builders, and legacy thinkers. Keep in mind that your asset must match your temperament. Bitcoin is highly volatile, so if you panic sell during drawdowns, Bitcoin will hurt your portfolio. If you can't manage that, tenants, or all the legalities, real estate will trap you. Right, now that we compared Bitcoin and real estate on different levels, it is time to decide which one is best for you, and I will help you do exactly that. Ask yourself 3 questions. 1. What's your goal? If you're looking for high returns and don't mind having your capital locked in an asset for a bit, then Bitcoin might be good for you. But if you're looking for a stable investment that grows predictably and linearly more than high return potential and needs some cash flow for your expenses, then real estate might be a better option. Next, ask yourself, what is your timeline? If you don't want to lock your money for decades, then Bitcoin may be a better option than real estate, as its cycles are about 4 years long. Now, if you don't mind investing in something for the long term, real estate is a good option. To be honest, for most people, real estate is never short term. This doesn't mean Bitcoin can't be held in the long term though. My personal opinion is that Bitcoin will outperform real estate in the long term if no major technical flaws appear. And lastly, what is your stress tolerance? If you are not comfortable seeing 30% swings in your portfolio in a matter of days, then real estate might give you a bit more peace of mind. But you also have to take into account the stress generated by managing your property, as it doesn't come without its headaches. If you can handle large movement swings and are not afraid of being in the red for a while, Bitcoin might be a great option. As the chairman of Strategy famously said, volatility is a gift to the faithful. So if you believe in Bitcoin and hold it in the long term without panicking whenever the price crashes, you might just do very well with your investment. We just compared Bitcoin and real estate, and now we are ready to decide which investment is best for you. If you're still watching this, congratulations, you're a smart person, and this is for you that I make those videos. So if you enjoyed this video, please leave a like and subscribe to my channel. If you want to go a level deeper, I'd recommend you watch this video where I go through the top 7 crypto tax haven you can legally move to. I'll see you there.